Can you buy a house even if you've had collections? Getting a home loan does not require you to have absolutely perfect credit. You may have a collection in the past and be able to still get pre qualified for a mortgage. It all depends on the type of debt you have, how much there is, and the type of lender and loan you're attempting to get. In this video, we're going to cover if you can buy or refinance if you ever had collection accounts. Let's begin by talking about your collections and how they'll affect the ability to get a mortgage. Most mortgage lenders depend on heavily on your debt to income ratio. One of these ratios deals with your potential housing cost and your gross income each month. Your debt to income ratio lets the lender understand how much you can afford. Considering these amounts and also paying the collection accounts. The other deals with the total debt and payments each month. These monthly debt payments include student loan payments, car payments, childcare, child support, and we add the mortgage you're attempting to get. The magic number for most lenders is a debt to income ratio or DTI of below 43%. Let's talk about derogatory credit or late credit and how it's going to affect the ability to qualify or be determined for approval. For a mortgage lender may cap the amount of derogatory credit that you can have in order to qualify for a loan. This includes items like collections, charge-offs, judgments, liens. Collections and charge-offs are usually not figured into your DTI unless you're currently making payments on those accounts. Tax liens and judgments are two items that must be satisfied before you can close and be approved for a home loan. Those tax liens may be you may be able to close with a tax lien if there's a repayment plan set up for with 12 months of on-time payments. Let's talk about what to do with collection accounts. We'll begin with new collection accounts before we do anything with any collection accounts. It's very important. You should always check with your lender. If you're going to do anything to pay off your new collection accounts, you want to make sure to get a detailed payment arrangement in writing before paying. The arrangements should detail out the total amount you'll be paying, the total number of payments you have to make, when the total payments are due, when what collection fees or interest are added, and what will happen at the end of the payment term. How about older collections? First thing you want to do when you see older collections on your credit report is to make sure that you owe that account. If not, you need to send a request to all credit repair agencies asking them to delete that account. If you've determined that the information on your credit report is correct and it is your collection, then it's time to figure out what to do with that debt. Paying off old collections can do sometimes more damage on your credit score. And your credit score, what will happen is you'll clear out your credit score, but it'll reactivate that account. And this can drop your score and affect the ability to get a mortgage with those collections. The only way paying an account will help is if the creditor will remove the collection from your credit history called pay for delete. Understand that all lenders allow a certain amount that will maybe in collections for a borrower. It may be better to just keep the account open with the balances below 30% of their max. You may also want to check with your local statute of limitations. Collections that are 12 months or older do not affect your credit score. Check with your statute of limitations and the debt collection. Usually this is around 3 to 6 years. Don't reactivate your account. Having a collection on your credit score can do great damage. If you affect your credit score and diminishes over time, the effect of the collection diminishes over time. Paying off these debts could bring your account to the forefront again. If you have student loan collections, you may want to check with your local lender to see if you qualify for a mortgage. Defaulting on a student loan can put a hold on your dream of home ownership. Federal student loans are not dischargeable. They don't have a statute of limitation. FHA mortgage loans will certainly not be approvable for anyone with defaulted student loans. If you have a default, there may be options to get you back on track. These include loan rehabilitation, loan consolidation, repayment in full. And how about medical collections? With medical collections, Credit bureaus must remove paid accounts from your credit report within 45 days. Negotiation with these collection agencies and wait for signed agreements before paying the account. Most mortgage underwriters will not require that old collections may be paid off. They will most likely require a letter of explanation why these accounts are in collections. Can you buy a house when you've had collection accounts? Knowing where you stand and getting a handle on your credit report and early in the process is important. Get a full picture of your credit, create a strategy to make a great improvement on your credit, but it is important to know while challenging it is possible to get approved for a mortgage with collections on your credit report. The most important thing is to know where you're at, what your credit report shows, and create a plan to be sure you get all your credit answers. We're here for you. Give us a call today. Thank you so much for watching.